Well, we want to keep it with the matters financial inclusion, and I want to now bring in George Edwards, who is joining us from our City Center studios. Good afternoon, Mr. Edwards. I hope I got the names right this time round. And he is the head of research at EcoBank. And there's a lot happening in the financial space. Perhaps let's just start off with the conference that is currently underway in regard to tackling issues to do with trade, and of course, scaling up the various dynamics when it comes to financial inclusion.
Mm. Well, certainly trade is incredibly important to East Africa. There have been two events this week in Kenya, one the GTR Trade Conference, and then this morning EcoBank Kenya held a conference looking at digitization of trade. East Africa is one of the most dynamic economies in Africa, and particularly if you look at Kenya, there's such a diversity of commodities produced. We think normally of things like tea and coffee, but in fact, the largest export from Kenya and from the region is horticultural goods. Things like flowers going to the UK and to the Netherlands. So trade is essential, but there are blockages to it. There's a lot of problem, as always, trying to raise dollar liquidity in order to do international trade. And there's a lot of disruptors now, fintech disruptors, who are coming up with new solutions.
And speaking about new solutions, we've seen a lot of fintechs coming in the financial space. I remember just 2 days ago I was attending the Euro Money conference that is also taking place here in Nairobi, and it seems like the financial players are working towards moving away from the brick and mortar to now looking at other alternatives that are being offered on the technology space. What are the trends looking like, Edward?
Well, I think it's true that there is a necessity for everyone to go digital. The whole reason I got interested in disruptive technology was I found it was disrupting every single sector. I mean, you see it yourself in the media as well, with the proliferation of other media channels. And so essentially, with all of these different innovations that are out there, we're finding new ways effectively to finance trade. And so the key thing here is really you need to be pan-African. You need to have some kind of solution which can be rolled out across the continent. M-Pesa has been a huge success in Kenya, but unfortunately it hasn't been replicable. There hasn't been able to roll it out across the rest of Africa. With EcoBank, we have a single app in 33 countries, which means if you have a bank account in Kenya with EcoBank, you effectively have a bank account in 33 countries. Instant payment, a single app. That is the real key. If you have innovations, platforms for payments, and there are many of them out there, it's essential that they're interoperable and as many countries as possible are included on the mobile platform.
Interesting. And looking at the developments around fintechs, how disruptive are they likely to be in the financial space now that we're seeing the Uberization of the financial sector?
Absolutely, I think it's true. I think we're seeing the Uberization of the entire economy. And of course, that's nothing new in Africa. The informal economy, informal contacts between people, they make up most of the economy in Africa. And I must say, every time I come to East Africa, I learn something new, whether it's the Mercato market in Addis, whether it's Eastleigh in Nairobi, whether it's the Kimboronko shoe market in Kigali. It's extraordinary. The informal sector is so incredibly vibrant here. But the key here is how do we get the informal sector into the formal, to formalize the flows? And this is where digital comes in. So banks in the past did rely, as you said, on bricks and mortar. Now it's about the digital infrastructure. It should be anyone who has a mobile phone can connect and can do banking services. And that's where we're seeing the real competition. The fintechs, the startups are the ones who are really pushing forward, but they need the banks because we hold the money.
Sure. You guys hold the money. And speaking about technology, as you can see, we've now moved into our super war. But Edward, right now, we are in a very precarious situation as a continent. The political risk facing a number of economies is becoming more real. We are seeing a lot of credit uptake hasn't been looking up that much in the last few months. For example, in Kenya, the credit uptake has gone down by about 4%. What's in the horizon for Africa when you're looking at both the political risks associated with the continent as well as the credit cycle, where a number of millions of people are still locked out of the financial space to get cheap and affordable credit?
Exactly, I think it's true. I think generally there is a problem that Africa has, unfortunately, a very bad image internationally. Countries that don't know Africa and should know it better make many assumptions. They look at a growth rate in one particular country, they think it's the same elsewhere. But of course, across Africa, there's huge differences between all the different markets. So I also think that unfairly Africa has this view that political risk is much higher. It is true that we have more political risk in Africa than maybe, let's say, 5 years ago. But if you look at all of the ratings, for example, of sovereign bonds for Africa, only one country in sub-Saharan Africa is called investment grade, Botswana. Every other country is considered junk. And frankly, that's not accurate. If you know these markets, the strong, diverse markets like Kenya, Tanzania, Ethiopia, Senegal, Cote d'Ivoire, it's ridiculous to suggest that, in fact, they're very high risk. So there needs to be a change. But I think on the financial inclusion front, there's been a recognition that the only way to actually include the hundreds of millions of Africans who still do not have access to financial services is digital. But it's not going to be one player who does it. It's going to be partnerships between banks and between many, many of the other fintechs who are trying out solutions across Africa at the moment.
And Edward, looking at Kenya, to be precise, it's a $60 billion economy, and we have close to 42 banks. Do you feel there's need for a little bit of consolidation? Because if you look at the numbers, 66% of the top 6 banks control the banking sector, whereas the remaining close to 7% is in the hands of the tier 2, tier 3, tier 4 banks. Is it a concern for global players that perhaps we might have to rethink this scenario where there's a sense of being overbanked?
Yes, no, what I think it is this is part of the natural financial cycle. If you look at what happened in Nigeria 10 years ago, there were way too many banks. They went through a severe crisis, which was handled well by the government and AMCOM, and in the end, there was sectoral consolidation. If you look at Kenya and the statistics that you've given, absolutely we expect there will be consolidation. And bear in mind, of course, that Barclays is trying to divest from Africa, and one of its absolutely richest assets it has is Barclays Kenya. So it's absolutely inevitable that there will be a change of hands, and I think it comes down to, are any of these banks actually adding value? If they're adding value to the economy and to the financial sector, they're introducing innovation, then yes, they'll survive. But if they're just doing what other banks are doing, business as usual, then I think they will be swallowed up.
Right. And Edward, just before I let you go, of course, a number of banks have been struggling to have a footing in Africa, especially the multinational banks. And EcoBank, where you work, is one of the Pan-African banks, which has sort of had it rough in terms of penetrating the Kenyan market. Perhaps what can be done differently in terms of innovation and, of course, just trying to be ahead of the pack when it comes to financial sector deepening?
Yeah. Well, listen, I think the fact that EcoBank is not bigger here in Kenya, number one, reflects the fact that we're relatively new. We only came here 5 or 6 years ago and acquired a relatively small bank. We are the largest bank in most West African markets, but we're not that big here. But I also think it's a reflection of how impressive Kenya's financial sector is. We came into a financial sector which is very competitive, which has a lot of very strong banks and strong brands. What for us is going to distinguish us is we are genuinely Pan-African. 33 countries, 33 banking licenses. We are also partnering with MasterCard with the MasterPass, which means that effectively anyone can be a vendor with just a simple QR code, even labeled to them, if they want to be able to pay over the mobile phone. So I think it's things like that which will give us the market edge. But we fully recognize it's a very developed sector, Kenya's banking sector.
Awesome. Perfect place to end the conversation. We are speaking there to Edward George, who is the head of research for EcoBank, just talking to us on some of the trends we are seeing in the financial sector. He sounds quite optimistic that there's a lot of tweaking happening in the financial sector, and eventually players in the global stage might relook at how they assess Africa in this day and age where there's a lot of frontier markets looking to invest in Kenya. And of course, we continue to have this conversation here on KTN Business Today.